Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of the Apartment Gurus. And I can't think of a more appropriate name for the show today, given the caliber of guests that we're so blessed to have on the show. Mr. Brian Burke is really, going to be somebody that a lot of you are familiar with. Brian is a frequent speaker at conferences, some of the biggest conferences out there in this space, and other events. He's also an author. He wrote a book called The Hands-Off Investor, which is an insider's guide to investing in passive real estate. And he's acquired over $800 million worth of real estate over a 30-year career, 4,000 multifamily units, and 700 single-family homes. And he's used some proprietary software that he wrote himself. That's something I'm not familiar with. I'm very interested to hear about. He's also subdivided land, built homes, constructed self-storage, but really prefers the existing multifamily space, the repositioning of multifamily assets. So Brian, man, dude, this is a privilege and a pleasure to have you on the show. I'm super grateful for you being here.
Yeah, I'm grateful to be invited. Thanks for having me on.
Yeah, you bet. So a true guru, guys, and on the Apartment Gurus here. When you look at the name of the show, I'll humbly say that it's not me that's the guru. It's the guests and it's often the listeners too that are gurus or gurus in the making. So Brian, your career, 30 years, thousands and thousands of units, hundreds and hundreds of single family homes. With now a preference and a focus on the multifamily existing asset type. Tell us a little bit about kind of your story over those 30 years and how you kind of got to where you are today with dealing with existing multifamily mostly.
Well, how I got here is probably a big mystery to me, just as it is to anybody else. Because, when you set off in this business, you never really know what's going to happen. And I would have thought that I would have been a small-time real estate investor. I remember at one point, I set a goal for myself to buy one house a year and thought that if somehow or another I could make it to buy one house a year, by the time I go to retire, I'll be better off than, most people are when they retire from their jobs. And that was, I remember initially setting that goal. And then when I was buying like 3 houses a day, I kind of would look back on that goal sometimes and laugh a little bit because you kind of wonder, how did I get here? And it really was just a matter of, perseverance. I didn't really have much other option. I'm not good at much else. So I just felt like real estate was the way that I was going to actually, make a difference in this world. And every day I got up and did something to help further that career along. And, here we are 32 years later, and we can quote statistics like that. I never would have thought you could say those kind of statistics in my name in the same sentence 32 years ago when I first started doing this.
It's fantastic. It's a great story going from a goal of one house a year. I mean, and that really speaks to the kind of the magic of mindset, right? Like at the time, was that 30-ish years ago that you had that goal?
It was about 25 years ago. So I'd already kind of been into real estate for a little while. I'd done a couple house flips, and I'm like, I need to kick it into high gear and buy a house a year.
Yeah. So, like, and the reason why we set goals, any goal really, and one of the things that is heavily determining of what that goal is really mindset. It's really what you believe you can achieve. And at the time, like, that's where your mindset was. And there's nothing wrong with that. Like, and there's nothing wrong with, for listeners, wherever you are in this journey, there's absolutely nothing wrong with where you are. And I coach people in this space, and I'm lucky enough to have some great clients, and that this is the first thing we work on is, what do you believe to be possible for you? Number one, what do you want? What do you want to see happen? And number two, what's your belief? And a lot of times it's like, I really want to just start out with a 10 to 20 unit type building, or 10 to 30 units. And I gently, when we're in those conversations, I gently try to remind people that, doing a 20 unit is about as much work and is about as difficult as doing 100 units or 150 units. You still have to get a loan, you still have to raise money, you still have contracts and due diligence and attorneys and all the things that go along with it. So just for a second, if you could kind of suspend what you might call a limiting belief and get your head around, like, if I could wave a magic wand here, what kind of deal would I do next? We try to bust through those limiting beliefs. But at the same time, there's nothing wrong. I mean, look where you are now, look where you started. And there's clearly, a clear path from doing one house a year in your head to doing 3 houses a day in your head. Like, that's just remarkable. And what would you attribute specifically your mindset growth to? Was it just a matter of doing the things, or was there were there some mentors along the way? Like, what really shifted things for you?
No, I had no mentors, no coaches. I probably could have done a lot more, a lot sooner if I did have somebody pushing me. But once you start in this business and you get past kind of that, first deal phobia, and then your second deal challenges, and then your third deal hurdle, and you can kind of get past all that stuff, this becomes a lot easier. And so your mindset has the ability to open up to more things, when you start getting involved in this business to a greater extent. And I think when I set my goal for a house a year and then achieved it, and then, so I bought that one, and then I bought another, and then another. You get to this point where it's like, this isn't so hard. Maybe I could do 10 a year. And, then I was doing 10 a year. And then part of it too is also just circumstances, right? And I got really fortunate that in 2007, 8, 9, the real estate market was totally collapsing. And I was specializing in buying homes at the foreclosure auction at the time. Yeah. And, all of a sudden I was drinking from a fire hose, and there was a massive amount of opportunity. And when you've kind of prepared, right, by having a little bit of a history and a little bit of a track record, and now you get opportunity to couple up with your preparation, you can do some pretty incredible things. And that's when our business experienced the biggest spurt of growth, actually, was when conditions were the absolute worst. And that's when we grew tremendously, and we were buying, several houses. We were at least over 100 houses a year, sometimes up to 3 houses in a day. We were growing our investor base to be able to fund that. And then, of course, as we grew that investor base, now that's when we started turning more towards multifamily, because now we've got more investors than we can really handle for the single family side. How can we grow and scale and expand this business? And then, that's what led us down the multifamily path, was just the ability to kind of continue to grow. And, once you get in kind of that growth mode and you get used to it, then, your mindset shifts again, right? And now it becomes a lot easier to do a lot of scale and a lot of volume without being too intimidating.
Yeah. So it sounds like it was pretty organic, really. Like a lot of people kind of have this magic moment where, a coach or a mentor or a speaker at an event like yourself, or just somebody, a colleague, like that's doing a lot more business than them, inspires them to open up their mindset and kind of get their heads around that they can do a lot more scale than they maybe believed they could before. But for you, it sounds like just kind of putting one foot in front of the other, with the resources that you have, the mindset that you had, and then the opportunity, the circumstances that you mentioned with, the 07, 09 crash. And yeah, I remember being on the courthouse steps myself during those times. And there were a lot of, a lot of opportunities. Just for the sake of the conversation, Brian, what market were you in when you were doing all the single family stuff?
San Francisco Bay Area. So, one of the highest cost markets in the country. So it wasn't the easiest place to do it. That's for sure.
Yeah. I mean, you're writing some big checks. Most of the time, those foreclosure sales require payment in full within 24 hours or something along those lines. And so
24 seconds, you immediately have to tender funds. Yeah. There's no grace period. You hand over your funds or your bid isn't accepted.
Got it. So I'm curious about one particular piece of what you mentioned a minute ago. You said you grew your investor base, to do the single family venture, and eventually that kind of opened up the opportunity for multifamily. Curious if you have any kind of secrets or any guidance to those of us that are really focused on growing in the investor base right now. Back then there wasn't LinkedIn or Facebook or, maybe it was just getting started. Facebook was, but they certainly weren't the resources that they are today, the social media resources. How did you do that? How'd you go about growing that investor base to a point that you could scale up into multifamily?
Well, the funny thing is I still don't really use social media that well. So, because I think I learned to do this another way. I mean, really, growing an investor base is all about building trust, because no matter what, investors will not part with their hard-earned capital to someone they don't trust. Right. So, trust means that you have to have several different components, right? You have to have an investor that already trusts that real estate is a good place to put their money. And so a lot of times people start in the wrong place. They're trying to grow their investor base among people who are investing in stocks and bonds. And it's like, why can't I get anybody to invest in real estate? It's like, well, they don't really believe in it, and you're not going to convince them that they should. So, start with people who already want to invest in real estate, and you're at least a third of the way there. The second piece that you need people to trust you. They need to trust that you're the right person to invest in real estate with. And that's the difficult one. This is the biggest hurdle to climb, because you have to have demonstrated there's a reason for them to trust you. And so that means you have to have a track record. It means that you have to have experience. It means that you have to have delivered results for people, and that you can show those results to your prospective investors and say, look at what I've done. Look how successful I've been. If you want to be a part of it, here's how. And then the third component is they have to trust the deal that you're presenting to them. And if they like real estate and they like you, but they hate the deal because they don't like that market or they don't like that property type or whatever, they're not going to write that check. So, the first and the last ones of those are fairly simple and straightforward. It's that middle one, that getting them to trust you part that's difficult. And, we grew our investor base by just growing our base of trust, because we would, when you're doing single family, you're getting a lot of rapid turns, and we were producing immediate tangible results for people. Yeah. And then they could tell their friends about it. And then when we would meet new people and they would ask about what we're doing, we could easily show them, look, here's our last 15 deals and how much we made. Here's a bunch of investors that are happy with us that you can talk to. Here's the returns that we've been generating, and you can show people those things. That's really what makes the difference. So when people say to me like, oh, I'm going to go out and start doing multifamily, I'm going to do a $20 million deal, and it's going to be my first deal. that's a really difficult hill to climb, because how are you going to convince the investors for that deal that they should trust you and you're going to be able to execute on that if you have no track record, never doing anything? And then people say, well, I don't want to do single family. That's a waste of time. I don't make enough money in this and that and the other. Well, it's not about making money. It's about building a track record. It's about building trust. It's about building an investor base. And it's one brick at a time. And that's literally how we built ours. We didn't build it by blasting out social media and having a bunch of people calling us up. We built it by producing tangible results and, being able to demonstrate to people that we knew what we were doing. And it just grew, one brick in the wall at a time.
Yeah, I like that. And honestly, that's a path for building an investor base that I've never really considered. It's doing small deals in volume, whether, in this case, single family. You could probably do it with duplexes, fourplexes, even small commercial. And, a single family flip is sometimes 3 months, 4 months, 5-month type venture. So you can produce these returns and these results for investors really quickly. And like you said, all of a sudden you've got 15 deals to show a potential investor with all the metrics and all the returns. That's really powerful. And I've kind of been in my coaching and the podcast hosting and whatnot. I've been a proponent of skipping the single family phase that a lot of people think you got to go through. Start small and start building up from there. And at least start with small multifamily or 10, 20 unit type deals. But this is actually a really interesting argument for why, how to leverage your single family experience to level up and to get to the next asset class, which is commercial multifamily. What do you say when people ask you, because I'm sure you get this question, like, do I need to start small and work my way up, or should I just jump right into commercial multifamily? What's your response to that, Brian?
I usually advocate very strongly that they start small. I mean, you need experience, and the larger, there's this old schoolyard saying, right? That the bigger they are, the harder they fall.
Yeah.
And, if you get into a deal that's too big for you and you don't know what you're doing, you screw it up, it's going to fall really hard and take you out permanently. Yeah. If you fall and make I call it the rookie mistake phase of your career. If you experience the rookie mistake phase of your career on smaller deals, you'll probably be able to recover from your mistakes. You might not be able to recover from your mistakes on large deals that permanently take you out. And that's only one of the reasons. The other reason is you just need to be able to build that investor base and build that track record and build that trust. And it's difficult to do that at large scale. Usually you have to start with a small seed and you have to build from there. And, this advice isn't applicable to everyone. There are some people who maybe need to skip certain parts of this organic growth process because they have the ability to. An example would be someone that comes from a really wealthy family that has a lot of really wealthy contacts. They might be able to convince enough of their inner circle to invest in them because they trust them for a different reason. They trust them because they're related, or they trust them because they're a friend of the family and that sort of thing. And you might be able to get a jump start a little bit quicker if you have that advantage. I didn't have that advantage. I didn't know anybody that could rub two nickels together. When I first started in this business, I was a grocery store clerk. Wow. And, I didn't know anybody that made more than $17 an hour. So, to build a business where you have millions of dollars in play, when that's your inner circle, is impossible. You have to start much, much smaller than that and build your base of investors. So I think people need to take stock of where they are and who they know, and then make a decision on how best to proceed initially.
Yeah, I love that. I love, you got to, like you said, take stock, take inventory of your resources. And obviously a huge part of that is your investor base, your potential investor base, your network. They say your network is your net worth, right? And there's lots of great ways now, especially growing your network. There's online meetup groups. There's there's events, there are national conferences, national events where you can actually meet people in person, like Brian, and hear them speak. And there's lots of there's masterminds that you can join. There's coaching programs that have communities that you can join. So there's lots of ways of building community, but at the same time, you need to start where you are. And Brian's story is a great example of that, where he took inventory of what he had, he took stock of what he had, and realized what he needed to do to get going. And initially, it was very humble goals, very kind of a vision that was a kind of an entry level vision, so to speak. Not to at all devalue that, because in essence, it was probably the most important goal you ever set. Was that one goal a year goal, because it got you going, it got you started. And was there a particular, go back to those days when you were a grocery store clerk, was there a particular motivation or inspiration, mentor or book or anything along those lines that really got the juices flowing on the whole real estate world to begin with?
Well, nothing that I would want to encourage anybody to read, because one of the reasons I got started in real estate was I was trying to figure out some kind of get rich quick kind of game, right? And so I thought, well, I could be this book marketer, and there was this thing where you could become this distributor where you could sell these books, and you send out postcards to people and they order books, and then you in turn drop ship the books from the publisher to the buyer, and you get to keep a cut. And I'm like, I'm going to get into this book business. So I get into the book business, and I was like 19 years old, right? And I'm doing this literally from our dining room, my parents' dining room table. And I thought, well, I should read the books that we're selling, because they're terrible books. Nobody would buy them if you didn't send them a postcard and encourage them to do that. So I read them, and one of the books was investing in real estate. And, the book that was on investing in real estate said, you don't even need any money to invest in real estate. You can get other people's money. And I'm like, this is perfect, because I don't have any money. This is what I got to do. I got to do this real estate thing. And, that was probably the little tiny spark that, even though it was probably the worst real estate book that was ever written, it still got the juices flowing in my mind that, it would be possible to invest in real estate with having no money, no knowledge, no contacts, no nothing. Of course, it doesn't say how difficult that path is going to be to take. I learned that along the way, but it certainly shows, it's proof, what I've accomplished so far is proof that it can be done. I could say that. Yeah.
Yeah. You certainly have you've done a great job of proving that, and you become an author yourself now, and a very sought after speaker at these conferences and national events. So it sounds like the impetus to make the switch from the single family world to the multifamily world was just that you had, and this is like the best scenario in my opinion, you had enough investors interested in investing with you that you couldn't accommodate them at the single family space. Is that pretty much the case? Did I get that right?
Well, I think so, but I think another way to put it is that, I did it because there was no other way. Same as when I got into real estate to begin with, is like, I'm not really cut out to be someone else's employee. I don't have any other skills in other areas. So if I want to make this happen, I thought I was going to be an airline pilot, but I couldn't even afford to finish the flight training to get all the way to my, airline transport pilot license. So it's like, all right, real estate's kind of the only way. I mean, as Tony Robbins says, if you want to learn how to get off the island, you burn all the boats.
Right.
Well, I had no boats, so I had to invest in real estate. And then when we expanded to multifamily, it was kind of like I had to. I could see the future, because we're in this period where there were hundreds of foreclosures every single day that we could buy. We were churning and burning. We were raising money and all this other stuff. But in the back of my mind, I'm like, it's only going to be about 3 or 4 years, and all these foreclosures are going to be gone. And then what are we going to do? We're going to have all these loyal investors who love us. We're going to have no product for them. We're not going to be able to make any money in foreclosures anymore. What's next? And multifamily was the one business that I knew was scalable and sustainable, and you could do it through a variety of market cycles by just altering your approach, altering where you're investing and how you're investing. And if I wanted to be able to provide a product and service for these investors, I needed to find something like multifamily that would be a sustainable business and a scalable business. Mm-hmm. And out of necessity, we made that move.
Mm-hmm. Mm-hmm. Yeah. So how did you learn about it? Was there, obviously that you had to have gained some specialized knowledge in the multifamily space. Was it books? Was it events? How did you learn the ins and outs?
I learned it because a real estate agent that was selling my flips was a CCIM.
Yeah.
And I called him up and I said, I'm thinking about doing a 1031 exchange. I've got, I was on this buy a house a year kick, right? So I had a couple rental houses and I'm like, I want to do a 1031 exchange and sell 2 of my rental houses and buy an apartment building, because that's what you do in Monopoly. Right. And I'm like, but I don't know anything about multifamily or commercial real estate or how the finances work. So I'm really intimidated by that. Can you kind of show me the ropes? And he said, come into my office. So I set an appointment with him, went in there. He sat me down and kind of told me all this different stuff about how to read a rent roll, what the APOD was, which is, the annual property operating data, which, now we call it a T12 and, in the larger multifamily space, taught me how to read all of that stuff and kind of gave me like a basic, kind of like a very, very basic elementary level so that I could then read other books and learn more about how to expand. And then about, I don't know, maybe a month later, he called me and said he had this guy that was going to be listing this 16-unit apartment building. Mm-hmm. And he thought it might be a good opportunity for my 1031 exchange. And it was. The timing was right. I was just getting into escrow with those other 2 properties. I didn't have quite enough money coming out of that 1031 to close on this deal. So I went back to that crappy book that I read years before that said, sellers will sometimes finance it for you. So I asked them, I'm like, if I could get a loan for like 70% of the purchase price, would the seller carry back half my down payment? And then I could come up with the other half out of my 1031. We asked the seller and he said, yes, amazingly enough. So I got my first apartment building with partial seller financing and a 1031 exchange. And that gave me the basis of the foundation of my knowledge. Before I got into larger multifamily, I'd owned that thing, 5 or 6 years. I had bought another 11-unit building and renovated it. And so I had kind of built up that knowledge and skill using small multi. Again, organic growth has always been kind of the thing that's propelled me. And I used that to form the basis of my skill for doing larger multifamily.
Where were these properties? Your 16 or 11 unit? Were they still in that market in the Bay Area, or were they elsewhere?
Yeah, the first one was in California, Northern California. The second one, believe it or not, was all the way across the country in New York. So that one I bought in 2006, and it was really like, I was looking around at the market here in California and I'm like, there is no reason whatsoever to buy real estate in California. Prices have gone berserk. So there's no way I'm going to buy. I want to go try to find something somewhere where prices haven't gone up in like 20 years, because then they're not going to fall. And I found this building, this great building, right downtown in the best neighborhood of Buffalo, New York. And I'm like, Buffalo hasn't gone up ever. Prices have never moved. So they're not going to go down. So I bought that. And then like immediately after I bought that, everything in California fell by like half. But this little building I bought in Buffalo was going up in value. It's like rents were going up, the value was going up. And it was the strangest thing. And it's now, probably tripled in value since I bought it, 10 or 15 years ago. Or however
you still have it?
Still have it to this day. Yeah. Yeah. And I finally sold that first 16 unit that I bought. I sold that 5 years ago. So I think I owned that for, about 15 years, I guess, before I sold it.
What a great strategy. Is that typical for you to hold on to stuff 5, 10 plus years?
Not at all. I mean, on the single family side, most of what I would own would be measured in weeks,
right?
Certainly not months or years. And then on the multi side, in the syndication world, long-term holds aren't really a thing. And so, the longest I've owned anything outside of, these initial small multis that I bought for my own account, that I owned for a long time. The longest one I've owned has probably been 5 or 6 years. And generally we're selling stuff in 2 to 3.
Yeah. Yeah. And that's typical of apartment syndication these days. And the way that investors want to see things happen with their capital is, they want to see a pro forma. They want to see what target rents and target returns are going to look like. And then really they want the fastest path to get to those. And we, up until maybe 4 or 5, 6 months ago, we were in a pretty frothy market where you could achieve those pro forma rents sometimes in a year, year and a half, 2 years, and exit and achieve your entire business plan that you may have projected to be a 5-year business plan, but all of a sudden it's 18 months. Man, I know you've experienced that, and you've probably heard many, many stories like that, and that, but things have changed.
Boy, haven't they? Yeah, they've changed a lot. We've sold about 2,500 units in 2021 and the first half of 2022, early 2022. And, we were delivering 7 to 10 years of performance in, 15 to 24 months. Wow. And, that was really an incredible time. And come about March, I guess it was February or March, I thought, you know what, the market is about to tank. So I called up 2 of our brokers and said, I want you to, you don't have time to generate an offering memorandum and do marketing and all this other stuff. I want you to get me offers in a week. And he did, and we got incredible price and sold. Now I've only got about 1,000 units left. And those are all Class A properties in Class A areas in top markets with high rent growth. And, I anticipate that we're going to be doing the full business plan on those. We're going to own those for the 5 years that we projected when we bought, just like we always did. We're not going to get rewarded with a nice 2-year exit on the ones that we have left in our portfolio, I don't think.
Yeah. And a lot of that's going to obviously be dictated by what the market does. If we get into a recession here, what kind of recession it is, how fast the feds bring interest rates back down to fight the recession. And, at Greenlight, we're just doing deals that are cash flowing deals as they sit. We're getting them on debt that's fixed for at least 5 years, so that we can execute an entire business plan and ride through whatever economic downturn there might be. It sounds like you're kind of thinking along those same lines.
Yeah, we are. I mean, right now I'm not buying anything. We probably will next year, but I'm just waiting for things to fall a little bit more. But whenever we're buying anything, and this has always been the case for us, we use pretty conservative leverage points. We're sitting at 65% LTV on most of our portfolio, and most of our acquisitions, we're kind of we usually have a limit somewhere in that neighborhood. We never really go over 75% LTV. Okay. We usually do 7 to 10 year maturities so that we don't get stuck in a short-term loan. Right. And that's always been our MO. But now this is why. This is just showing why this is the way that we've always done it, is because it's sooner or later an adverse market cycle is going to creep up on us, and you want to be prepared for it, and it's here, and we're prepared, and that's totally fine. And we look forward to starting to build our portfolio back up as soon as we can get some definition to the market.
Yeah, because you got to be sitting on some dry powder right now. You just sold 2,500 units over the last year and a half, 2 years. Like, is that the strategy to kind of hold on to that and be ready to pounce when you see the great opportunities?
That's exactly right. We like to just we like to sit back and wait. We're patient, and we will find the right opportunities when they're there. And I have no problem spending my time, playing golf or taking vacations
Right.
when the time is right, and that's what we're doing right now.
Well, for those of you watching on YouTube, Brian's tan is much better than mine. Much deeper brown, goldish brown tan, and you look great, man. You look like you've been rested and recreating, and well, I'm curious. I was going to ask you this towards the end of the show, but what do you like to do for fun, Brian? What's your jam on the recreation side of things?
I like to fly airplanes. That's
wow.
kind of the one thing I enjoy doing the most. And so I like to do that. And I like to take beach vacations. We've got a second home in Maui, and I like to go home and sit on the beach for days on end. I can work out there. Thankfully, with technology, it kind of allows me to run my business from the sand about as often as I ever want to. But it's a really good way to recharge, and recharging is important. I started taking up golf again. It's been 20 years since I really used to play a long time ago, but doing a little bit of that now, and not very good, but that's okay. I don't care.
Man, that is a tough sport. I've been playing my whole life and am not at all good. It's one of those that you got to invest a lot of time into, and patience, man. You mentioned patience earlier in relation to investing, but golf is such a microcosm of not being attached to the result, even though you visualize exactly what you want to have happen, man. But all of a sudden you're shanking it 90 degrees to the right, and you got to just roll with things, and you don't have a choice with golf. It's I've almost quit a number of times. So
I get it. Yeah. I get it. I'm not good either, but I kind of, I don't really care. It's like, to me, it's just a nice outing. It's most golf courses are beautiful places to be, and it's peaceful, and that to me is enough. I don't care if I shoot 110, whatever, it doesn't matter.
Yeah, that's about probably what I would shoot right now if I went out. But awesome. So I want to ask you, you're very you're a very visible, prominent thought leader in this space at this point with your book and your speaking engagements. Like I said, I've seen you speak numerous times at different events. What from a general level, like a kind of an average listener, reader type level that people are in contact with you, and you get a chance to kind of contribute to them. What do you hear the most? Like, what are the pain points that you hear people ask about the most, and how do you address those?
Well, I think probably what I hear more than anything is more people unsure about what the greater economy or markets are presenting at any given moment. And a lot of people are asking, like, where do you think interest rates are going to go? Or where do you think cap rates are headed? Or what do you think is going to happen with rent growth? I get a lot of questions about that kind of stuff. And that seems to dominate most people's mind. And I think that's for good reason. People want to make sound investment decisions, and they need inputs to reconcile in their own mind what the output might look like. And everybody's always trying to figure that out. Mm-hmm. And I think I probably spend an inordinate amount of time, in discussions surrounding those variables. And unfortunately for me and for whoever's asking me the question, these are all somewhat unpredictable.
Yeah, crystal ball questions. Yeah,
they're crystal ball questions, and I think all crystal balls are somewhat cloudy, even the best of them. And we've done really well at timing markets. I stopped investing in about 2004, almost entirely, and that was a great decision. I started back up again in 2007, and that was a great decision. We started buying rental houses in 2009 and holding them for a 5-year period, which got us out around 2014, which was an excellent decision. We started heavily buying multifamily, and then we started heavily selling in 2021. So timing has worked in our favor a lot. And I think a lot of that is intuition and just being able to kind of see where the market is going, just with gut feel a lot of times and a few data points. And so I think that's why people tend to ask me a lot about what I think about where the market is headed, because we've been pretty accurate a few times.
So your pencil's down right now for the most part?
Yeah, we're pencils down right now. And, it's interesting. I was talking to some Phoenix brokers not long ago, and they were asking me like, hey, what's your opinion of the market? And I'm thinking like, well, by the very fact that you're calling me and you haven't called me in 2 years tells me all I need to know about what the market is doing. Yeah. Because obviously you're not busy enough with buyers that you don't have time for me anymore. So I said, I just can't justify buying, 1980s Class B apartments for $300 a door. And, I've heard a couple of them say, well, those same ones are now $250 a door. And it's like, well, okay, that tells you something. But when you get to 200, then call me, because I think, they need to come down a little bit more. So yeah, we're pencils down, just waiting for sellers' expectations to come in line with where we feel we need to be to make smart, sound investment choices.
Yeah, and we're recording this on September 6th, 2022. For you listeners, and this will get published probably in October. And we're in a very interesting time in the cycle right now where interest rates have spiked, equity is pulled back, and sellers' expectations are kind of starting to come along depending on the market that you're in, but they really haven't fully adjusted yet. So there's a lot of people like Brian that are pencils down, not underwriting deals at the moment and kind of waiting to see where things bottom out. Do you feel like, and I know this is a crystal ball question that we just talked about, but do you feel like the Fed will be, pretty much done raising interest rates by the end of the year, as a lot of people have indicated, or what are your thoughts on that?
I don't know. And, they've made some comments that make it sound like they don't really care what the economic consequences are. They're going to keep going until they can break this inflation cycle. Yeah. And it may take a lot to do that. And that could mean that there could be more increases in store. And I think that's one of the reasons why we're pencils down is until we can get some definition to where things are headed, it's difficult to make investment decisions when you think I think there's a higher likelihood that things move against us than there is a likelihood that they move in our favor. And that would be opposite of what I would have said, a year and a half ago, where, there was a greater chance, in my opinion, that things were going to be favorable than unfavorable. And I think right now the opposite is true.
Yeah. Yeah. Well said. Well, we're running up against time here. I hate that because this has been a great pleasure to have you on the show and get to kind of jam with you a little bit here. This is a funny question, but is there something that I should have asked you, something that would be valuable for the listeners to hear, that you can think of to kind of wrap things up, advice for either the aspiring operator or the operating operator that's looking to scale up?
Well, I think you nailed that with your question about the organic growth issue. Okay. I think this is one topic that comes up a lot with aspiring and growing investors is how do I get, to where I want to be from where I am now? And a lot of people don't hit on that question. I think they're afraid to hear the answer. So I'm glad that you asked it, because I think it's vitally important that people understand that it's okay to be wherever you are, and it's okay to take whatever path works for you. And I always suggest to people, do whatever it is that you can do, because that's better than doing nothing. Don't be the guy that's like, well, I won't do anything that's not 100 units or more because it's not worth my time to do anything less. And then you end up never doing a deal because you can never get that 100-unit deal together. It would have been a lot more worth your time to do a mobile home than it would be to do nothing at all.
Yeah. Yeah. I love that. And, like work with where you are, start where you are. That's just a great principle for life in general, whether it's business or relationships or spirituality or physical health. Like, you got to kind of embrace where you are before you can transform that and move to the next level. And so, doing something in real estate's always better than doing nothing. Do you still have a lot of your single families?
No, I have 2 left.
Okay.
And, and the tenants have just never moved. And I'm like, well, I'm not going to kick them out to sell it. If they ever do move, I probably will sell them, but I don't know if they're ever going to move.
Right on. And then just curious too, what markets are your 1,000 units that you have left on the table? Where are they?
Mostly in the southeastern U.S. We own right now in Arizona, Georgia, and Alabama.
Okay.
We've had properties in Florida as well, Texas. We've certainly been shopping heavily in the Carolinas and Nevada.
Mm-hmm.
But the bulk of our portfolios in the Southeast. Biggest markets for us that we've had the highest concentration at any given time has been Houston and Atlanta. Those have both been historically large markets for us. I've completely sold out of the Houston market a couple of years ago, but maybe someday I'll get back into that one. I think right now our largest concentration is in Atlanta.
Yeah, both Houston and Atlanta are fantastic multifamily markets, tons of inventory, lots of places that need attention, that have been neglected, that are distressed, just lots of opportunity in those markets. So, well, dude, this has been amazing. Thank you so much for gracing the show with your presence. It's a thrill for me as the host to get to chat with you and have you on the show. Where are you speaking next? Do you have any of the events lined up at this point? Anything on the books?
Yeah, I don't know if this is going to come out in time for people to catch it, but I'm speaking at BPCon in early October in San Diego. So that's my next one. And then I think after that, I'm in Austin, Texas for Keller Williams Commercial Conference. And then I think that might be it for the rest of this year. And then next year,
what do you do? You do
a few more.
You do like 6 engagements a year at these big conferences, something like that? Or
it's funny. I don't know. I say yes to people, and then I realize like, oh my gosh, I've done like 8 of these, and it's like, how did that ever happen? I was trying to stay to just a couple a year, maybe 2 or 3 a year, and it was in 2020, 21 with COVID, there were no conferences out there. So I got this big long break, and that was kind of nice. And then in this year, I got asked to do a lot of conferences. I said yes to everything because it's been so long since I've done anything that it didn't feel excessive. But I've probably done, I'll probably be at 6 or 8 this year, I think.
Is BPCon, is that Bigger Pockets?
Bigger Pockets Conference. Yep. Yeah, it's probably the largest conference in the country. They expect about 2,000 or 2,500 people. Wow. So it's gonna be a
that's
big
legit.
One.
Yeah. And then if listeners want to reach out to you, make contact with you, for listeners, it's Praxis Capital is Brian's company, Praxis Capital. And you're on all the social medias, LinkedIn, look up Praxis Capital on Facebook, LinkedIn, Twitter, Instagram, and then it's also on Instagram, investor Brian Burke with a E at the end of Burke. Any other good ways of reaching you, or are those the best?
Yeah, those are the best. Our website is praxcap.com. It's praxcap.com. Sometimes you can find me at biggerpockets.com in the forums answering questions. Certainly check out the book at biggerpockets.com/syndication book. Great resource for people trying to learn the syndication business or how to be a passive investor. It's actually written for the passive investor to teach them how to invest passively in real estate syndications, but it's also great for syndication operators to read because it gives them a window into what their investors are going to ask them. and they can be prepared and have answers for that. So I think if you want to learn what's in my brain, it's in 350 pages in the hands-on.
That's great. That's great. Well, Brian, thank you so much. This has been just a great hour or so here for me personally, and an honor. And I know that you elevated all of us, the listeners and myself, and just you're an inspiration. And thank you for all the leadership that you provide. And I look forward to seeing you at one of these next big conferences, coming up down the road. So I don't think I'll be at BPCon, but I get to a lot of them. So I look forward to getting to shake your hand in person.
Likewise, I look forward to seeing you at one of these things, and I appreciate the invite. It was my pleasure to be here, Tate. Thank you.
Yeah, you're welcome. Thank you. And thank you, listeners, for listening here to another episode of the Apartment Gurus. This is a true example of having a guru on the show and in the space to inspire us and educate us and get us going in the right direction. So you're doing good things by listening to these and listening to the end of them. Hopefully you're taking good notes and maybe even going back and listening twice, because you can get a lot out of the second listen through. So by all means, stay in touch, and you can reach Brian at Praxcap, praxcap.com. You can reach me at investwithgreenlight.com. So on that, hope you all have a great rest of your day. We're doing 2 of these a week now, and so we'll see you here in a few days with the next episode of the Apartment Gurus. Take care, everybody.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.